Argentina recorded its highest annual inflation rate in the last 3 decades in 2022 until 2023. This inflation rate made a price increase higher than Venezuela for the first time in recent decades. Currently, 4 out of 10 people in Argentina live below the poverty line. The country economy is so dependent on the US dollar that term economic dollarization has emerged. This created a barter economy, exchanging milk for diapers or other goods was an everyday occurrence. Every day, people reportedly guess what a fire price is a good for a bag of rice. They use social media to make a transaction. For the first time, I see data from Argentina Statistical Agency INDEC, which was released Thursday, 15 June 2023. Inflation in May was the highest since 1991. Nevertheless, actual inflation in May 2023 was slightly below expectation at 116.1% YoY. Details of debt are spread across several denominations, with the majority denominated in US dollars, amounting to 9 trillion US dollars, or the equivalent of 60.9% in a total debt. Meanwhile, the export performance of these wet products in country continues to decline, so that is cannot compensate for its high needs for US dollars, both to pay debt and import domestic need. Data from Argentina National Institute of Statistics census show a trade balance deficit of 300 million US dollar in August. This is still considered an improvement from a deficit of 437 US dollars in July. Weakening world demand mean that their exports were depressed on annual basis, up to 6.9% in August, while the value of import actually increased by 36.2%, mainly due to high dependence on fuel and lubricants. South America, former engine of economic growth, inflamed, facing the world inflation's worst inflation rate since the hyperinflation period of 1990. Argentina is an example of a country that struggling to overcome extreme inflation caused by the Russian and Ukrainian war. We are wondering now, how did things get so bad in this country? The crisis in 2018 led to the peso losing half of its value against the dollars. The IMF responded by loaning record 57 billion US dollars to business-friendly administration led by the President Mauricio Macri, but the deal failed to stabilize the economy. Fernandez's election in 2019 sparked a massive sell-off in the government bonds that his government later defaulted on without access to credit following the defaults. Fernandez printed money during pandemic to finance cash handouts and salary program, which sets the stage for inflation to surge higher. Fernandez also implemented a labyrinth of currency control and price freezes, creating an alphabet soup of different exchange rates. The measures provide ineffective and cooling inflation and currency losses, but made the business environment more complex for companies across the country. What's government do for fix this problem for inflation in this country? So far, nothing has actually been done other than trying to meet the goals set out in the IMF agreement. Fernandez says in Financial Times interview in 2020. He said, "To be honest, I don't believe the economic plan. His more consistent policy stance has been relying on the piecemeal measures to limit the economic impact, such as temporary prices and bans on laying off workers." Thus, an important lesson for the countries from Argentina Valid Currency Board is that improper exchange rate peg is doomed to failure. No matter how rigorously one imposes conditions to extend their credibility, the exchange rate arrangements are not cure for problem in the area of macroeconomic policy. Despite the relatively strong of rules governing the conduct Argentina currently board, the regime collapsed in relatively short order when the domestic and foreign investor determined that the Argentine government fiscal policies were stable. Moreover, there is little reason to believe that dollarization would have precluded the government from abandoning the peg For example, one proposal to deal with the current crisis that is now being circulated, the forced conversion of asset claims into the bonds. Presently at the present peso price, there is no reason that the same reduction in liabilities could not be achieved under a dollarization regime and convert return to bonds with a financial haircut in place. Once the legal protection of property claims is open to abrogation, no exchange rate regime can ensure asset values.